Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself what is appropriate to you. Okay, so looking at our market today, briefly we did break higher, but we pulled back to hold on resistance. So they're keeping us hanging for another session, guys. A break at this level, I'm bullish back up to around 69.30. But also, you know, if you have a look at the broader trend, we've come back to that longer term uptrend line through here. And it looks like we're breaking outside of the pennant. So, you know, there's a strong chance this could be the start of a further move higher. We have been sideways really since, you know, late November after that initial kick up after the election. We tried to go again, but, you know, we've just been really quite flat to sideways since those highs. We're really not that far away, right, from where we were at the top of the move after the election. So, you know, given the strength we're seeing overseas in the US and the executive all-time highs we've seen out of the Dow over the last week, you know, we're actually a little bit surprised we haven't broken higher already, okay? So the Australian market is holding back a little bit. We're starting to show some signs of life and just looking now whether we can finally get through this 68.30 level or not in the coming sessions. So, you know, coming across to the S&P 500, they did break into all-time highs last night. The futures sitting a little bit flat to a touch lower for the Dow at this stage. So, you know, not really much of an indication out of the futures. But, you know, I wouldn't be surprised to see a few days sideways around here, or maybe another sort of kick up but then a pull back out of the US markets. They tend to go a little bit whippy when they break into all-time highs unless there's a strong catalyst. The Fed could be that catalyst later this week. Let's just see what they come out with. They're due to talk Wednesday night local time here. So let's just see, right? Thursday morning we'll get a bit of a feel. The Fed last time they spoke did pull markets back a little bit. We'll talk to that about that in a bit more detail in a moment. For now, look, you got the S&P 500 breaking out. Then you got the Dow Jones. It's been extremely strong for the last week. That represents a lot of your infrastructure value type stocks. And then the Nasdaq is finally breaking higher, which is more of that tech space. They had the correction of 10% in the tech space, and then from there they've finally kicked up and broken out of that flag pattern, indicating that they'll probably come back up near that all-time high resistance. So by all means, I give up over the medium term, and I think it'll be a slow grind up from here. So over the last week, we saw the 1.9 trillion stimulus get passed, final sign-offs and everything it needs to be sent out. $1.9 trillion, guys, being pumped into the US system. That should offset a lot of these issues and problems that they've got because of COVID and lockdowns and the rest of it. So although you see businesses closing doors and a lot of people locked down over there, you know, just keep pumping more money into the system, guys, okay, which is just going to keep them floating along until things do unlock. And then when you start talking, you know, couple that up with what the Fed's been doing, with the QE and the rest of it, and really low interest rates, they're just extremely accommodative, right? So they're supporting the credit market. The only thing we need to watch here, guys, is what the longer term bond yields do from here. So we've already seen a significant rise over the last month. That put fear in the market. The last time Jay Powell spoke, he put a little bit of fear in that credit market, in that there's going to be a bit of a push up in inflation. Now, you've got to listen to their words carefully and you've got to think this through carefully. You've got Janet Yellen on one side saying the inflation's not going to be a problem, and then you've got Jay Powell on the other side saying, just a heads up, there could be a bit of an inflation spike. He's not saying that there's going to be a massive increase in inflation and interest rates are going high. He's not saying that, and I think people are reading too much into this. There has to be an increase in long-term yields to price in the inflation that's eventually coming. We have not seen that inflation yet. We saw a weak CPI reading out of the US, all right? So we're not seeing inflation yet, okay? Everything they're doing right now is to combat the close of the economy because of COVID. And you're not going to see inflation you will see some spike in inflation as the economy normalizes, because inflation is extremely low. We're coming off an extremely low level. So yes, you are going to see a temporary spike in inflation. Is it going to spike over the central bank's limits or the range that they're trying to keep inflation? Doubtful. Okay, not in the short term anyway. Will it get back up to 2.5%? Well, maybe it will, right? But remember what the Fed said last year. They said that they're happy to see high inflation for a short period of time and they will do nothing about it. Okay, so they are targeting this. This is what they're setting out to do. So I think the equity market pulling back, really, yes, is it related to that? But is it really just some people taking profit? Probably. Same as the bond market. People selling out of the bond market, the long-term yield part of the yield curve. They're taking profits, guys, right? These people bought in at much, much higher levels and they're selling out, taking profit, moving their money into something that's going to give them a better return. So all of these functions and all these things that the mainstream media's been talking about for a while, for me, still all adds up to being bullish equities, okay? Because the money's come out of the bond space and it needs to go somewhere. You've got a huge amount of stimulus supporting the US economy. Even though it's down the toilet with COVID, it is keeping things ticking over. You've got vaccines now being rolled out across the US and across Australia and many other countries. So there's light at the end of the tunnel. Reopening is slowly going to happen over the next year or so. And this accommodative central bank stance, the further stimulus that we're likely to see from the US, you remember, they haven't really spoken infrastructure spending yet, and some people are expecting that to come down the pipe as well. So for me, you know, the whole recovery story, stimulus story, accommodative central bank story says to me there's more in this move, okay? But we already have seen such a big explosion, big moves since the election last year. We might not see the same sort of momentum behind the moves higher than what we've seen in the past. It might be more of a slow grind from here. Who knows, right? But use your technicals to time your entries with your trading, guys. But all in all, look, people are worried about a bubble, okay? We've been talking bubbles for the last 10 years since the GFC. We know these bubbles get inflated a lot more than what people expect before they burst, and usually there has to be some form of catalyst. At this point, the eagerness of the US to continue to stimulate through central bank QEs and potentially yield control coming, all of that stuff, guys, says to me there's still plenty more air to go in that balloon. So for now, guys, obviously cautiously bullish to a little bit sideways is the overall sentiment for me, but all in all, yeah, I think we're still got some upside in this market, that's for sure. Look, yeah, looking for the Fed Wednesday night for a bit of guidance. What I believe is if they can bring the bond yields under control, stop them from rising as extremely as what we've seen recently, they bring that back into control, the tech space should come up a little bit and continue to rise, but value should also continue to rise through this. And this is where I think you know, majority of the sectors could continue to creep higher from here, rather than this switching between value and growth. I think the whole growth space after this 10% correction could easily watch that NASDAQ get back to the all-time highs in the next few months, as long as bond yields hold low, right? When I say hold low, hold at current levels, not rise extremely like what we've seen recently. Alright, so look, there's probably not much else to say than that right now. The market is a balance between stimulus, COVID, vaccine rollouts. You know, that's still the big picture here. We want to hear more infrastructure spending out of the US in the coming months. That could really heat things up again. But just looking at everything we've got in front of us right now, things are still looking bullish to sideways for us. Okay. All right. So that's enough from me. Thanks for listening in today. Take care. Thanks and bye for now.